The next one is a retracement. Now, what is a retracement? Retracement is when price moves back inside the recently created price range. Now, years ago, I think it was in 2012, I did a webinar called Trading Inside the Range. And a lot of folks that were following me on one of the forums that is pretty popular on the internet, they went head over heels when they learned this simple principle of understanding how you can trade inside of a range, and it doesn't even have to break out, it doesn't have to trend. You can define the range by a high and a low and trade inside that range. And that was the beginning basis point of how I brought a lot of people from that forum into the understanding of an order block. The order block was introduced in the Sniper Series tutorial on my website, but prior to that, I just gave indications and clues about what an order block was without actually really referring to or spelling it out for everyone. What's the importance of the retracement? Well, when price returns inside a recent price range, this indicates a willingness on the part of the market makers to reprice to levels not efficiently traded for fair value. When we're thinking retracement, the go-to is for ICT tools, we're looking for liquidity gaps and liquidity voids. When we look for price, when we see run-ups real quick and run-downs in price, in other words, real quick rallies up or real quick rallies down in price, many times that range that's created will want to come back in and close that in. And I'll give you an example of what that looks like now. Okay, this is an example of a retracement. As you can see here, the orange shaded area, we had a real quick sudden movement away from a price level. And that quick sudden movement creates what we call as a liquidity void. In other words, as the market drops aggressively like that, there's going to be pockets where the price wasn't actually delivered on every available price level at in that range. It moved too quickly, it skipped, or it created gaps. Well, what we'll do is we'll wait as a trader. We won't chase price. We'll wait and say, okay, well, there's going to be either an indication to get long and try to fill in that range, or we can wait for it to come all the way back up to it and fill in the liquidity void. Once it hits it, then it'll probably resume going lower. And that's what we're looking for in terms of a liquidity void. So we've